Hey, it's Mark. I wanted to put out some answers to questions that I've been getting over the past few weeks. A lot of times I'll get questions there. They'll come from different people at different times, but along the same lines, asking the same thing. So if that's something you're wondering about, listen on. I got 4 questions right here. I'll just read off to you what I've written to other people. And maybe if you're interested in knowing what I think about these things too, you come away with something that might be useful. So the first question, the analysis is very confusing. There's a lot of conflicting analysis, Twitter, Reddit, wherever, and just people, whatever. It's just conflicting analysis. It's hard to know who's right, hard to know what to believe. So my answer is, don't worry about right or wrong. I'm just reading it. Don't worry about right or wrong. You can't be right or wrong about the future. It hasn't happened yet. Data, fractals, metrics, trading patterns are good and useful, often just coincidences, but when you stack enough of those coincidences up, they all align from different angles, and they all align from different angles, you can start to make sense of things. I think about it like I think about the market like you're in a football or soccer game. You know your teammates' roles, their strengths, the team's game plan, in particular set pieces. You can use that knowledge in your experience and sense of what the other team's doing, but you can't know what will happen with each touch of the ball. That's how I feel when I look at this market. That's how I feel about a lot of things in life. You prepare for multiple outcomes, know what to look for, act when you need to act, and let the game play out however it's supposed to play out. Altcoin Insights, my altcoin research service. Any chance that I'll open it again? No, it's closed for good. Email me if you'd like the final report that I gave to subscribers, as well as access to my recommendations. I'll keep those accessible through October 2022, but I will not provide updates or new information. Nothing against altcoins. Why did I close it? I just wanted to spend my time and effort on other things that hopefully you'll find more valuable. I can't do that if I'm also doing the altcoin research. My plan, how did I set my lines? How do I set my limits? This always happens when the market's down. When it goes up, well, yeah, I get that too, because there are a lot of times when the market goes up where we let it and you don't buy into it. There are other times where it starts going up and you buy into it. Same with on the downside. There are times when the price goes down, sometimes quite significantly. We don't touch it. And there are other times where the price goes down quite significantly and we're in. And so look, the plan is just an easy way to identify good buying opportunities and avoid being underwater for years, holding through these massive bear markets we get from time to time. Specific lines and levels. For the specific lines and levels, I looked back at all 13 years of history and found certain levels hold the same significance. In all market conditions, they're very easy to identify and monitor. They don't depend on trading or on-chain data. They change as the market changes. And so the actual numbers are not that important, but you have to use something but you have to pick something. There has to be something as a guide. So don't obsess too much about the precise date, time, price, or metric. Let's not be a stickler about lines on a chart. Everybody can get a little ahead of themselves. The market can get a little ahead of itself. The plan makes sure that we don't do that. And the way we do that is by looking back at the full arc of history, not cycles and patterns and things like that, but just the full 13 years. And there are some pretty clear signals for when it's a good opportunity to buy and when we have to sell. Obviously, we don't want to. The point is not to sell. The goal is not to sell. There's no target for selling. But there are conditions where you got to get out. The Fed tapering, raising rates. We'll find out what are the consequences of the U.S. Federal Reserve tapering rates, the U.S. Central Bank tapering its interventions, scaling back its interventions in the financial markets, or raising interest rates. That's what the question is. We'll find out once they do it. The narrative that inflation is good doesn't really make sense to me, whether that's for Bitcoin or anything else, even equities. We don't really know how much of the inflation is legit, old-fashioned monetary inflation, or whether it's just the lingering effects of a demand shock that the supply chain can't keep up with, or a labor shortage that we just can't keep up with. So we'll just have to see. I'm more interested to see what happens to the people in the crypto market. Do the strong hands crater? And does U.S. monetary policy really matter for a global asset like Bitcoin? I do think there's a little too much complacency and assumption that markets have priced this in, a sense that the Fed will pull back if they go too far. And we don't really know. And even if you think you know, you don't know. And on that note, I think I might have mentioned it earlier before. It's people get so caught up in who's right and who's wrong. I wrote some prediction articles, not because I wanted to, but because people asked me. And so I wrote some prediction articles for 2022. Wrote some prediction articles. Preface for those prediction articles and any other prediction that you think I give, if it ever comes across as a prediction, is the problem with predictions is when you're right, it's a coincidence. And when you're wrong, people make fun of you. Or worse, they act or do something based on a prediction when nobody knows. And stop thinking you know. Everybody, stop thinking you know. Stop saying percentages. Stop putting out percentages as though, well, it's a 60% chance of this happens, 30%. Yeah, when there is data to suggest in the past that there is a certain condition. I know there are a few trading patterns where there's empirical evidence that when these things happen, there's a certain percentage of the time that they play out a certain way. Just like, in baseball, a guy's batting average. That is fact. That's a fact. And you can incorporate that into your decisions, right? Okay, 250 batting average. Okay, so 1 out of every 4 times, this guy is going to be riding the bench by the time his at-bat is done. And so you can plan on that. You can plan accordingly. You can run the data and make assumptions. But assuming that somebody knows what's right and what's going to happen, that's where you got to draw the line. So use this stuff to kind of understand the situation, right? You're not going to intentionally, a 200 batter who has no home runs and a slugging percentage of 223. You're never going to intentionally walk that person. You're never going to intentionally walk them. But that doesn't mean this can't be the time they step up and hit a home run. So just think about it that way and prepare for that. And understand that if you're trying to predict the future, that's a tough deal. That's a tough deal. But whatever expectations you have, you can ground those in the present. And the decisions you make shouldn't have to depend on somebody being right or wrong about what happens in the future. Well, they can if you want. But for me, it's not about being right or wrong about what happens in the future. It's about understanding that there are a lot of outcomes. And what do you do now to make sure you're taking advantage of whatever comes in the future? That's the basis of the plan. So I talk about it a lot in my updates. I know 50-50 analysis. I get it. Sometimes it might come across as contrarian. I don't consider myself a contrarian. Sometimes it might come along as going along with the sheep, the herd. I don't consider myself sheep or herd. I'm just looking at the market from lots of different angles. Think out of both sides of your head. Don't get too complacent and understand that, especially if you're talking about crypto, this market is crazy. The swings, the volatility is insane. It is insane. It's like nothing you've ever experienced. And so what I try to do is make it a little bit easier to deal with that. The approach that I take is, I think, it's conservative in a way that other conservative, I would say it's more on the conservative side. And by conservative, I don't mean we take profits. That is not being conservative. That is risky. There are quite a lot of times where taking profits is risky, depending on how you execute it. And basically, if you're wondering what I mean, when you take profits, there's a very good chance you're taking profits from the future that you're not going to have because you pulled out of the market. When if you stuck with it a week later, a month later, 6 months later, you're up. And when you're up in this market, you're way up. 30%. 3 weeks ago, everything 30% lower than it is today. Well, I don't know. I think we're going down now. I don't know what the price is. But I think while I'm recording this video, it's going down a little bit. So maybe it's 28%. 28% in 3 weeks? If you go to any other market, oh, hey, we're up 30% this week. I think we're going to roll over into bear market. They say, yeah, exactly, because nothing is supposed to move up that fast. But in crypto, you go up 30%. The moment you sell, that's when the market keeps going up. Same on the downside. How many times have you heard, buy the dip, buy the dip, buy the dip? And I'm telling you, that's not a dip. Wait for the dip. That's not a dip. Wait for the dip. And then the price just goes back up and you say, oh, Mark, I missed my chance to buy the dip. No, that wasn't a dip. That's just volatility. Oh, we're down 15%. You call that a dip? It's like Croc Dundee. It's like the guy pulls a switchblade in the subway and Dundee pulls out a machete. You call that a knife? This is a knife. And that's kind of how I feel about the volatility in crypto. You call that volatile? You call that a dip? No, just wait. And then when the dip comes, everybody's scared. You're probably scared. And you're worried. And it lasts longer than you think. Sometimes it lasts shorter than you think, and you missed it. And the price just goes up. Sometimes it lasts longer than you think. And you're like, oh my God, what did I do? Why did I do this? It's going to keep going down. When it's volatile. It's a volatile market. It's a tough market. It's a hard market on the way up and on the way down. And the whole idea of crypto is easy is that can be so stressful, especially you buy when the price is at the peak and then it comes back down. Then when it comes back down and the opportunity is rife, you don't have the money. Or maybe you did everything you were supposed to do. Price comes down and it just keeps going down. And it keeps going down, and it keeps going down. It's a hard market, a very hard market. And if you're wondering why it's so crazy when things are going great, why it's so crazy for somebody to say, hey, just set aside cash. Put that money into stable coins. Get some interest on those stable coins. Keep some cash. Make sure you have deep lines of credit. It's because opportunity comes when nobody else is talking about it. When you're not ready for it. And when you don't want it. But when you miss opportunities in this market, you miss out on a lot. And when you take advantage of those opportunities, it's hard. It's not easy. But you're rewarded for it many times over. Relax and enjoy the ride.